I just checked my brokerage account for probably the 15th time today, not because something crazy happened, but because it's December and my SCHD dividend payment is about to hit, and honestly, I'm more excited about that than I was about my last paycheck. That sounds insane, right? Getting hyped about a dividend payment that's probably going to be around $100 while I've got a regular job that pays way more. But let me show you why this matters and why the numbers you're about to see tell a completely different story than what most investing content shows you. Here's my SCHD position, no filter, 493 shares. Total cost basis, $13,510. That's an average of about $27 per share. Current value, $13,543. My total gain, $33. Now look, I know what that looks like. I've been investing for over a year. I've got nearly 14 grand in one ETF, and I'm up the cost of a decent pizza. The capital appreciation hasn't been impressive. Some of you are probably already swiping away to find someone who's doubled their portfolio in 6 months. But here's what that number doesn't show you. September 2024. My first dividend payment, $9.10. That's where this whole thing started to click for me, because I'd been buying stocks and ETFs for a few months at that point, watching numbers go up and down, feeling basically nothing except occasional anxiety. Then one morning, I wake up, check my account, and there's $9.10 that wasn't there before. New money, not the value of my holdings changing. Actual new dollars. Something shifted in my head that day. December 2024, $37.80. 4 times bigger than the first payment. Not because the dividend rate exploded, but because I'd bought more shares. The relationship between my actions and results became crystal clear. Buy more shares, get more dividends. Simple. March 2025, $64.40. Now we're paying for a tank of gas. June, $87.99. That's a utility bill. September, $98.52. We're almost at 3 figures from one holding. You see what's happening here? This isn't about the $33 paper gain. This is about building a machine that generates money while I'm asleep, at work, on vacation, wherever. And that machine is getting stronger every quarter. Let me tell you about a random Wednesday in July. Nothing special about it. I went to work, dealt with meetings, came home, made dinner, watched some TV. Completely unremarkable day. Except while I was doing all that, my SCHD shares existed. They sat in my account representing ownership in over 100 different companies, and those companies were operating, making money, paying dividends to shareholders. I didn't have to do anything. The shares did their job. I did mine. That's the part that keeps me coming back to this strategy. But I need to be honest with you about something, because the story gets more complicated. I don't just own SCHD, I've got another position that's been quietly destroying it in terms of returns, FXAIX. 53 shares, cost basis of $11,083 at about $207 per share. Current value, $12,757. Paper gain on FXAIX, $1,673. Yeah. While SCHD is up $33, my FXAIX position is up over $1,600, and it also pays dividends. December 2024, $24. April 2025, $25. July, $31. October, $34.18. So here's the question that's been bouncing around in my head for months. Why am I sitting here waiting for my SCHD dividend when FXAIX has made me 50 times more money on paper? The easy answer would be diversification or different strategies or some other investing buzzword. But the real answer is more complicated and honestly kind of weird. When my FXAIX balance increased by $1,673, I felt nothing. Okay, not nothing, but close to it. It's just a number on a screen that changes every day. Some days it's up $200, some days it's down $150. The gains are theoretical until I sell, and I'm not planning to sell for decades. So what am I supposed to do with that information? Feel good? Feel validated? It doesn't connect to my actual life. But when that $98.52 hit my account in September, I felt it. That money was real. SCHD could have dropped 10% that day, and I still would have gotten that dividend. There's something about money arriving versus money existing that hits different. FXAIX's $1,673 gain exists. SCHD's quarterly dividends arrive. I've been wrestling with whether this is smart or stupid, because mathematically, total return is what matters, right? If FXAIX grows faster than SCHD, even accounting for dividends, then FXAIX wins. The numbers don't care about my feelings, except the numbers also don't care if I panic sell during a correction. And here's what I've noticed about myself. During those weeks when the market drops and my portfolio value is down a few $100 or $1,000, my FXAIX position just feels bad. It's shrinking. I'm losing. But my SCHD position, I know another dividend is coming in a few months. That payment doesn't care what the share price is doing today. As long as I hold the shares, the dividend shows up. That knowledge keeps me from making stupid decisions when I'm nervous. Maybe I'm just weak-minded. Maybe other people can watch their portfolio drop 15% and feel nothing. But I'm building an investing strategy around who I actually am, not who I wish I was. In the early stages of dividend investing, it feels pointless. Those first few payments are so small that they barely register. $9.10 doesn't change your life. $37.80 doesn't change your life. Even $98.52 doesn't really change your life. But what changed for me wasn't the dollar amount. It was the proof of concept. Every quarter, money appeared. The system worked. And if it works with 493 shares, it'll work with 1,000 shares, with 2,000 shares. The scaling is simple, even if it's slow. That security is worth something I can't quite quantify, knowing that decades from now, I'll have money coming in that's completely disconnected from whether I'm working, whether I'm healthy, whether the economy is good or bad. The shares exist, so the dividends arrive. Those shares have become like a second job that requires 0 hours, and every time I add more shares, I'm giving myself a permanent raise at that second job. Meanwhile, my FXAIX position is up $1,673, and I barely think about it. It's doing great. I'm glad it's there, but it doesn't give me that same feeling of building something that generates income. This is where I get stuck, because I can't tell if I'm being smart or just rationalizing a suboptimal strategy. Total return matters. FXAIX is proving that, but psychological sustainability matters too, and SCHD gives me something that keeps me in the game. I've seen too many people quit investing entirely because they couldn't handle the volatility, or because they never felt like they were making progress, or because watching numbers go up and down on a screen just didn't connect to anything real in their lives. The dividends connect for me. They're tangible progress. They're proof the system works. They're money I can spend or reinvest without selling anything, and every quarter they get bigger. So now I'm sitting here in December, waiting for what's probably going to be my first triple-digit dividend payment from SCHD. And yeah, my FXAIX position has made me way more money on paper, but I'm not excited about checking my FXAIX balance. I'm excited about seeing that SCHD dividend hit. Maybe that makes me irrational. Maybe I should consolidate everything into FXAIX and maximize total return and stop caring about dividends. Maybe in 30 years I'll look back and realize I left money on the table by splitting my portfolio. Or maybe I'll look back and realize that having those quarterly dividend payments kept me invested through multiple corrections, crashes, and bear markets that would have otherwise scared me into selling. Maybe the suboptimal strategy that I actually stick with is better than the optimal strategy that I abandon. I genuinely don't know the answer. If someone told you that you had to pick one fund and hold it for the next 20 years with absolutely no changes, no selling, no rebalancing, just set it and forget it, which would you choose? A dividend growth fund like SCHD that pays you increasing income every quarter, or a total market fund like FXAIX that historically has higher total returns but pays smaller, less frequent dividends? Drop a comment and let me know. Not what you think you're supposed to say, what you'd actually choose, because I'm genuinely trying to figure out if I'm onto something or just making this harder than it needs to be. Either way, I'll be here watching that SCHD dividend hit my account and adding a few more shares for the next quarter.